The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Ho, ho, ho. Merry Christmas. Merry Christmas Eve. December 24th, markets closed 1 p.m. Eastern Time today. So we have a half day on Christmas Eve. Markets closed, of course, on Christmas Day. Back open on Friday. Right now, we pick things up. Probably shaping up, as of right now, to be a pretty tame day. Look at this overnight action. No action whatsoever. S&Ps within 1/4 of a point of where we were last night. So we're flat right now across the board. S&Ps, NASDAQ up by 1, Dow up by 2, and the Russell is flat. Bitcoin continuing to be under pressure. You hit a low of almost 86,500 overnight. We're down by $300 at 87,370. Been a tough year for Bitcoin compared to the rest of the market. Now, Bitcoin really accelerated, ahead of that election. Right? Almost a story of buy the rumor, sell the news, accelerates on the election news. And then all of that was priced in already. And we're actually below where you were when you think about in terms of that acceleration. Nonetheless, Bitcoin down about 0.3%. We jump over to yields. We got unemployment claims this morning. I have to update that one. We're a little bit higher on the yield basis right now. You have that reaction yesterday, the GDP news. And right now we're trading at 4.16. Okay, the 10-year, 4.16. You jump over to the dollar, continuing to be under pressure. We hit a low of 97.75 last night. We're trading right now off 1 penny at 97.93. And you can't stop talking about gold and silver. Just when you think, oh, is this the pullback? No, that's not the pullback. You get it all back yesterday. You trade lower on that GDP number as you have yields a little bit stronger on that GDP number. You had a little bit of dollar strengthening, and then you gave it all up, right? You gave it all up and then some. As in the S&P, the gold contract, 45.55. How about that one, man? You look over to silver. Silver right now, up another 1.3%. We hit 72.75 overnight. We check out the volume on gold and silver as we just continue higher. Strong volume on that move yesterday. Check it out, right? The silver contract continuing higher with volume. You check out a weekly basis. Now, it's only Wednesday, but we've already done almost 300,000 contracts, and it's Wednesday at 9 a.m. If this was a normal trading week, silver would have volume because you're doing it on a daily basis. Now, we're going to get a half day today. The markets are going to be closed on Thursday. We won't have live programming on Friday at TFNN. But we'll be open in the Tiger's Den. I encourage you folks, if you're not in the Tiger's Den yet, come on over and get in the Tiger's Den. Great time during the holidays. A little bit more of a relaxed atmosphere. We get a few extra days off in there, of course, with Christmas on a Thursday this year and New Year's on a Thursday. So markets closed at 1 p.m. today. We'll be live up until 12 o'clock today, folks. Ho, ho, ho. I got my Spider-Man Santa shirt on. I've been saving this one, waiting for it the whole year. Jump over to platinum. How about it, man? Platinum almost hits 2,400 overnight. Going back to a 15-minute. 23.95 just after the close yesterday. Platinum right now up $35 on the session. $2,322 an ounce. Quite a run. We were just trading at 1,500 almost a month ago. 1,500 to 2,400 in the span of about a month. You take a look at the monthly. We've never had a month like we just had, folks. Never. In the history of platinum trading, we've never, not even the run that we had back in 2008. No, not a month like this. This month kicked off with a low of 1,600. You made it to 2,400. That's an $800 bar in platinum. We were trading at $878 for an entire bar of platinum in April. Meanwhile, we just moved that high in 1 month. And where are we now? Right at the 1 to 1.618 expansion area. That's where we are. And what is that area? 2308? 2308. right? So you make it right up to the highs of 2008. We're just above that area. That's your 1 to 1.618 expansion. I think the dollar's got weakness, folks. I don't expect, this gold market, platinum market to collapse, okay? But it's due for a consolidation or a pullback. A healthy consolidation or a pullback, because you keep going like this, and the eventual first pullback is going to be more substantial than it probably needs to be. You want a healthy, orderly market, and if that's the case, occasionally there's going to be some selling. But it doesn't appear to be the case, not at least in platinum. You jump over to copper. Look at all of them, right? Look at this run. Copper. Higher highs, higher lows. Copper up another 5 pennies, up by 0.8% right now. Jump around to some of those silver stocks. Now, this is what you could see as a little bit worrisome, okay? The equity is sometimes getting ahead of the metal, right? You got silver back to where we were on the open on Monday. First Majestic back to where we were on the open Monday. Silver on the open Monday was trading at 68.65. Okay, we're $3 and change higher on silver. Silver's 5% above where it was Monday, and the equities have not caught a similar bid. You jump over to Hecla, right? Hecla, below where you were at the beginning of Monday. Again, silver just continues to climb. The equities not as much. Okay? Pan American, right where we were on Monday. So anytime you see that type of move, say, okay, hold on. The equities have run higher. Silver's getting a little bit parabolic. The equities are not trading higher in pair with the metal. And maybe investors are a little bit worried, bidding up the equities, thinking that these silver prices are sustainable for the equities. One leads the other occasionally, and equities have had a heck of a run. But silver, folks, just traded from $27 in April, and don't even use that one, right? As in, that's a heck of a run all year, and we've barely had a pullback on a weekly basis. But this one alone, just in the last month, from 48 to 72, you're talking about a 50% appreciation almost, folks. That's the weekly. You put things back on the daily, and there it is. And that's your 1 to 1.618 that could bring you up to $75 on silver. And that began on November 21st. Quite a pullback. You jump over the VIX. Yeah. Great conversation with Tim Ward yesterday. We talked to him Tuesdays and Thursdays. Not going to talk to him tomorrow because it's Christmas Day, folks. But we were talking about the VIX, and you better be paying attention to the VIX, folks. All right, look at that weekly. Ooh-wee. The entire last month. Now, this will pick back up, but I don't expect we're going to pick back up anytime soon unless you get some real drastic news, which is probably not expected as we come into the holiday season. We got some news this morning. Jobless claims fall to 214,000 during the volatile holiday season, as Bloomberg puts it. The market was looking for about 224,000. So initial claims for the week ended December 20th come in at 204. Now, the other side of that is, right, you get the holiday season. In retail, you're probably not getting layoffs, okay? And in general, are you really getting layoffs that week? Who's getting laid off December 20th? Hopefully, if you are making layoffs, it's a dire situation that you're not making them 4 days before Christmas, right? Doesn't mean it can't happen. And sometimes it has to happen if the company's just failing. But it's a tough situation to lay somebody off on December 20th, of course. And that's the week of data we're getting right now. That's the data. We're getting data for last week. Who got laid off last week? Well, initial claims, 214,000. We'll talk about some of this when we get back, folks. We got markets flat. Christmas Eve. Ho, ho, ho. Come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. And how's that for very little volatility in the overnight session? And that's what you can expect when you have a VIX pushing a 13 handle. The S&P's flat to the ticks right now at 69.61, basically at all-time highs. Not even basically, right? What are we, 2 points off of all-time highs? Is that what we are? 2 points away from all-time highs as we sail into Christmas. NASDAQ 100, we're positive by 5 right now. The Dow is negative by 5, and the Russell is negative by 1. So we talk about AI. Reminds me of Mr. Michael Burry, right? He's out there chirping about AI, chirping about accounting, right? About the lifespan of some of the depreciation of these assets and how you can play with, and many times these equities, okay? You can tweak balance sheets, especially when it comes to earnings, right? That's why you got the top line, which is gross revenue, and then you get the bottom line, which is net profits, net revenue, however you account for it. You can do a lot in between the top and the bottom line. And one of the things that is getting attention, and probably rightfully so, is the accounting of the capital expenditure of these AI buildouts. And what this one talks about, so this one's out early from the Journal this morning, it's a good one. AI construction costs can be an accounting black box. Yeah. So you have spending on chips is lumped together with the capital expenditure of a build out of a building. Those don't have comparable lifespans, folks. Okay? The lifespan for chips can be much shorter. And I think we're all aware at this point that if you're buying computer chips for AI and they're 2 or 3 years old, throw them out. I exaggerate, of course. Okay? But that's not what you do with the data center, and that's how they're all being lumped together. So tech companies provide the cost of data centers and chips associated with the long-term construction project. They don't break out the cost for each, nor are they required, despite vastly different time periods of depreciation, right? The facilities do not depreciate at the same rate, but on their books they do. Now, if they get this build-out done quick enough and revenue comes to fruition quick enough, that's great. But if they don't, this is where the pain is going to be, right? That they have these on their books depreciating at a slower rate when in reality, they're going to have to, that asset that's on their books is worth far less because they should depreciate the chips at a much faster rate. And when you're talking about trillions of dollars, that's going to matter. When they're not depreciating it on their books, okay, and they're holding it, meanwhile, that is losing value. And yeah, the debate over the longevity of AI chips, they expect their servers and network equipment to last longer without replacing or discarding them. Replacing the equipment less frequently helps preserve cash flows. It also reduces depreciation expense and increases the reported profit. Yeah. Now, when a lot of these companies were going through it during the pandemic, right? Some of the things that they did is they changed their depreciation of some of their assets, and right away that just allowed them to be more profitable. So Alphabet, I'll post this one in the den on Christmas Eve. This one's a good one. Alphabet, $50.6 billion in assets not yet in service from 2024, up 44% from a year earlier. Amazon, $46.4 billion last year, up 62%. Okay. Meta has data centers off the balance sheet. Microsoft doesn't give the number, but at about something like $32.1 billion related to the construction and improvement of the data centers. Collectively, $215 billion this year. Yeah. $215 billion. Companies tend to count AI chips in the construction in progress amount because they often buy GPUs during the data center construction. I mean, this should be getting more publicity because it ties down to the profitability of those companies when they report. Public companies made 79 changes to their estimates of the useful lives of assets, many of them increases in the lives of servers and network equipment. The highest level since 2020. Yeah, I remember this happening. People writing articles saying, hey, they're adjusting the lifespan of some of their assets to tweak the profitability of their numbers. Once the project's complete, companies' disclosures on the value of the assets usually becomes clearer, but they still generally don't provide a line item on how long they expect chips to be profitably used. So that's not going to be a dire situation overnight, but that's something to watch. Because just like we see how quickly hold-to-maturity securities, right, on banks' balance sheets can be a massive problem, well, you potentially can have assets on the books of some of these big tech companies that they assign value for that's actually worthless. That's how quickly that happens, right? You put chips on the books that you assign a very slow depreciation on. Okay, now depreciation is a loss, right? And in real estate, that's like the golden egg. Okay, you're taking in rent, and on a cash flow basis, you can be massively profitable. But on an accounting basis, you can actually make no money and pay no taxes because you're depreciating the real estate over a period of 15, 20 years. That's great if you're trying to limit your income to limit taxes. All legal, and that's why real estate, when you're talking about taxes, depreciation versus cash flow, is advantageous, to put it lightly, in many situations. But it goes the other way around when you're not worried about taxes and you're trying to show profitability. And then so what you're doing is you're not taking that depreciation to show the actual losses that are actually occurring. Okay, and depreciation is supposed to be real, and it is real. And that eventually you're going to have to replace all those assets, right? So they are losing value. But boy, you get a lot of leeway of how you can do that, and you're seeing the tech companies do it in terms of not assigning a difference from the chips that they're taking in versus the cement they're pouring, right, to house those chips. Big day for NVIDIA yesterday, and today we're slightly in the red by about $1. Jump around to some of the other big dogs. Amazon shares trading at 232 right now. You jump over to Microsoft, trading at 487. No real action across the board so far. Meta shares slightly in the red. Tesla been on a tear. You're higher again by about a couple bucks on Tesla. We jump over to Robinhood. Flat right now at 120. Palantir trading at 193. You jump over to Nike shares, been under pressure, but a little bit higher as Tim Cook buys $3 million in Nike. Now, you know, Tim Cook's a billionaire. So $3 million is not a massive position, to put it lightly, but nonetheless, you know, we'll take a look at Nike when we come back. This thing, it's been quite a downtrend, and boy, you had some volume on their earnings last week. Maybe it's an issue of all the selling. We're coming back, folks. Market's flat. Christmas Eve. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
welcome back, folks. We got equities open. Remember, half day today. Closed at 1 o'clock. The markets, you just heard that Forex Trading Unlocked ad, folks. We're talking to our man Teddy Kegstad coming up in the next segment. Always a great segment. Stay tuned for that. And we pick things up when markets chopping around near red territory with the S&Ps, all of them basically slightly in the red. S&Ps negative by 1. NASDAQ negative by 8. The Dow negative by 42, and you get the Russell actually leading the way, off by almost 0.3%, off by 6 points. You jump over to Intel this morning. NVIDIA does not approve of their production facility. Well, I generalize, but that's the story. NVIDIA down by 3.6%. Intel shares fall on a report that NVIDIA halts the production test of basically one of the new facilities that Intel's trying to get into. NVIDIA recently tested the so-called 18A process, but stopped moving forward. Now, this report's pretty light on details, but NVIDIA, all these circulatory deals, right? They recently put $5 billion. NVIDIA agreed to invest $5 billion into Intel in September following the government's decision to become an owner in Intel. 18A is a bid to return to making Intel's best offerings in-house. The technology contains 2 new features that Intel says are breakthroughs for the industry. Well, this morning, NVIDIA disagrees. The first relates to transistors, the microscopic switches that give semiconductors their function. Modern chips cram tens of billions of transistors into a small area. In order to make them more efficient, the ability to switch these transistors on and off becomes critical. That 18A product will be the first to have transistors made with so-called gate-all-around technology that allows finer control of the process. Well, Intel didn't find that process too likable as they stopped testing it for right now, and Intel's trading a little bit lower this morning. All right, we jump back to the jobs number. So you get initial claims decreasing. You actually had continuing claims rising, though. Now, continuing claims is 1 week delayed. That number for continuing, 1.92 million, but on an initial basis, you're down to 214,000. So Intel down by 2%. We jump around to the big dogs. NVIDIA off by about 0.8%. So check out the chips. The SMHs basically flat, down by 11 pennies right now. Check out the banks. Yeah, these have a couple bad ticks, which makes these charts look a little weird. JP Morgan right now slightly in the green, but a heck of a run for these banks. Let's back it up a little bit. Yeah, look at this run from the April lows. Some of the best buys out there were actually the banks. Bank of America up another 11 pennies. And look at this. I mean, we're finishing at this all-time highs. All-time highs. We are literally at all-time highs with Bank of America up by 11 pennies right now. Wells Fargo trading higher by about 0.3% right now. Goldman, more than double the price it was trading at in April. You're flat right now, barely in the red, down by 10 pennies for Goldman Sachs. Morgan Stanley up by 0.2%. Let's jump back to metals. Okay, giving back some of those gains. What? It's Christmas Eve. This market, we're going to be on autopilot by about 10:30, I think. Gold contract up by $8 right now. But even look at the chop since about 10 o'clock last night. $5 to $10 a movement, which is nothing in the metal. Silver right now back above $72 at 72.04. And platinum up by 20. Jump back to the dollar. Talk to Teddy next segment. Dollar 97.92. We take a look at crude this morning. Continuing to rise. 58.64 right now for crude. We check in on yields. Yeah. Look at how tight that movement is. What do we got? 1 to 2 ticks of movement. All the overnight session into this morning. You get the 10-year up by 2 ticks, about 4.16. All right, let's take a look at the stocks. Let's do it. Let's do it, Duncan Steve. And we're going to look at Nike next, too. I've been flying. I meant to look at that one. We'll look at Nike. So the stocks, the Philadelphia Semiconductor Index, okay? What's this? No, the iShares Semiconductor Index? Yes, iShares Semiconductor Index. You're looking at the semis. We're up by 0.3% right now. Let's take a look at this thing. Oh, look at that volume. Okay. That's a daily. Jeez, not exactly too encouraging when all the volume spikes in recent territory. And, you're always going to get some volume on a selling day. But, boy, you have the acceleration in October. You have the acceleration in November. You do catch a bid on the November 21st low in the market, but pretty unremarkable volume on that complete climb higher. And then when you get it, what do we get? I mean, yeah, not exactly a bullish chart. Yeah. I mean, look at this. We get the selling, and then what do you get? You get a bounce on lighter volume, right? I mean, everything's just trailing off, but that was some selling off those highs. You trade into it on lighter volume, you rip lower on volume. Something to watch. Yeah, looks like you get some volume to the downside. All right, Nike. So, Mr. Tim Cook buys $3 million worth of Nike, and you're up by 4.3%. Now, check this out. Okay, they come out with the numbers. They're disappointing numbers, to say the least. You drive lower last week with volume. You're coming into this volume bar here. Their earnings from 6 months ago. Okay, this is the earnings from June of this year. You actually traded lower on lighter volume. You broke below that bar, and you did it lighter than we were there. And you got this floor out here, $52. You're catching a bid, and let me tell you, our man Bud Rolfs, the channel master, okay, he would always say, folks, the buy is not the breakout of the channel, right? The buy is the retest. And maybe that was your test on lighter volume of this bar. Now, you want a sign of strength as well. And on a weekly basis, it's not going to compare to what we did last week. But I do like the fact that we're bouncing right here. And from a risk-reward perspective, if you're swing trading this, you're short-term trading this, well, here's your stop, man. Okay, don't give it a lot. $56.99, give it a few bucks. I mean, even that's a 5% move, but you don't give it a lot. Because if that's going to be right, okay, if this methodology is going to be right, then that means that we're not going back into this channel line. So I actually like the channel setup here. Okay, that was massive volume on the sell last week. But as you can see, we actually got above that area, and I found myself looking at it this morning, saying, you know what, man? Nike's down from 180 to 52, 56, 59 bucks right now. And yeah, they have a ton of competition, okay? And this market got ahead of itself, pushing this thing all the way up to 180. I mean, I remember they were going to go direct, right? They were going to sell everything direct. There was a lot going on during the pandemic, of course, during that period of time. We've been in a downtrend channel since November 2021. You're talking about 4 years. 1, 2, 3, 4 years of downtrend. At some point I'd be a buyer of any equity and a seller of any equity. And there's only one Nike, folks. Okay, I talk about, they got some real competition. That means that, yeah, we're not going to triple in price anytime soon. But yeah, I've begun looking at Nike when you're trading back into prices that we were trading at a decade ago. Okay, because Nike is still Nike. They got real competition, whether it's Hoka, right, On brands and stuff like that. But Nike's still Nike, and they're not going anywhere right now. And yeah, technically, don't give it much. That's what I'd say if you're trading this thing. Because if you're right, you're not going back in that channel line. All right, folks, stay tuned. We're coming back with Teddy Cakestat. We're going to talk some commodities, some currencies. Stay tuned. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 3, NASDAQ negative by 1, and we get the dollar right now chopping around near 98. And as we do each and every Wednesday, folks, at 9:40 Eastern Time, we're going to jump over to our man Teddy Kegstad and check out Teddy's outstanding Tiger Forex report, folks. You can sign up for $97 a month. He's got new issues every week. You get a webinar in there as well. It comes with a 30-day money-back guarantee, and if you're looking for some good education as well, you get some time over the holidays. 2 great webinars, Capitalizing on Time with Calendar Stock Option Spreads and Japanese Candlestick Pattern Stock and Option Strategies. You sign up for those both, folks. Either one, they're on your members page forever. You watch them as many times as you like. Teddy Kegstad, Merry Christmas. Ho, ho, ho.
Merry Christmas to all you guys.
Thanks so much, man. Thanks for everything you do. Your outstanding report coming on this program. And so we got, a pretty tame market today, Teddy. Looks like everybody's ready, including myself, for Christmas holiday, the markets. But for the listeners, the viewers out there, what are you seeing in this market as we come into 2026?
Well, I'm pretty happy with the action we've had this week. I figured that the dollar would sink a little bit lower. We spiked a little bit lower today. Now it's stabilizing. I wouldn't expect to see very much today or into Friday, at all. I think you're probably not going to really see very much over the next week or so. Probably not until, probably a week and a half from now when we have our first full trading week of the year. So there's no real reason to see anything really go. We have a nice swing trade in the U.S. dollar yen. But the reality is markets are going to be thin. It's the end of the year, end of the quarter. With the holiday in between the middle of the week and stuff. So I just really don't think you're going to see any real true movement. It's gambling. If you're gonna be trading these markets, I'm just telling you, you're gambling. So you're doing it wrong. You just got to be very careful and just have really rational expectations, because volume is gonna dry up very quickly. So is the spreads, no matter what you're trading, getting in and out of any trade. So I'd be very, very careful about how that's going to move, especially today, because you are going into the holiday close. If you're going to trade any more this week, I would say end within the next hour or two, and then definitely don't start again until Friday at the very least. And then I would even be careful on Friday if you're going to trade that session, because it's a Friday in between holidays also. So
no, great advice. I couldn't agree with it more in terms of so often in trading, the discipline of patience or not feeling that need, right, to have a little action, like we all know, as it goes. And like they're talking about in the den right now, low volume holiday trades are often a flip of the coin. And I couldn't agree more. And I think for anybody with a little bit of history experience that, things just, it's very tough to peg when you got so few market participants. And realistically, man, It's Christmas Eve at 10 o'clock in the morning. We're all ready to get out of here. Market's closed at 1. But,
and the rest of the world's already shut down.
I want to ask you about the VIX because, you got 2 great webinars available under the services tab. You talk about options in there a little bit, so I know you understand the VIX very well. And jump into the market in general. We've had quite a volatility squash a bit where we got the VIX down at a 13 handle now. What do you think about that in general right now? Pretty low volatility, indicative of a market at all-time highs, but pretty remarkable. I know you love options, man. Talk to me a little bit about the VIX if you could.
I think that a lot of that, what you're seeing there, has to do with the fact that, you're at the end of the year with the holiday markets. There's really no reason for volatility to jump right now over the next week or so. So I think that's really why you're seeing the drop in the VIX. I bet you see a rise in the VIX come January, especially towards like the third, fourth week in January as we head into February. I'm expecting some very good volatility after we get into the first couple of weeks of the year. So we have a lot of, look at the markets on its highs. We have a lot of markets on their extremes. I think you are going to have some nice currency swings once we get past the first of the year. Odds are you're going to see the dollar index continue to drop. You'll probably see the U.S. dollar yen trade really start to swing around. Right now you have a little profit-taking rally in crude, but I'm pretty sure that if it may not happen by the first of the year, but within the next couple of weeks, I think crude is going to make a lower move low. If that happens and the dollar index, gets hammered too, you can see some big swings in the U.S. dollar yen trade. So for sure. So there'll be some action. I think if you got a trade to start looking at, going into the first of the year next week, especially come a week from Friday, or even positioning into the new year, I would say the U.S. dollar yen might be one to take a look at, especially if you have where it looks like crude and interest and the dollar is signaling a trend in one direction where you can play off that currency cross.
We got a question in the den, Teddy, about just possible January effects. Now, equities are one thing. You got tax selling, right? We have all this stuff. But in general, do you notice something over the long haul in terms of impacts on terms of currencies, whether you're looking at December, January in general, or is it just, I know they trade with a lot of momentum, currencies in particular, but is there any type of effect as you come in January that you look for in general on like a time basis, historical basis?
Sure. Okay. Well, not in the sense like you would have like with the equities markets. You don't have those kinds of moves, but definitely in January. So you got to realize that the central banking cycle is reset. So now we have the platform. We know when the Fed meets next. We know that they just cut rates. You have, especially since you have a divergence in central banks. Like when you have them all on par, you kind of have set the trend for these major markets over the next couple of quarters. This time we're heading into where we have the central banks around the world are looking to raise rates while we're looking to still cut rates. So I think that divergence that you have there should have a shakeup in the bond market. You'll probably see it in the shorter term rates moving into the 10-year probably in the first couple of weeks of January. So I would look for interest rate swings for those spreads to start to move. And as those spreads start to move and the yield curve starts to move, then I think you'll start to see a good trend in yields, which then would be indicative of setting off a trend for the currencies, especially the dollar index, especially if we have an easing on yields, which I think we probably will see that moving into January and February. That should put pressure on the on the dollar index. So we'll see what happens with that. Anything can obviously happen, but I really believe that that's probably the reaction you're going to see, as far as those markets are concerned. You'll probably see a lift in gold. The levels that gold is at, I think it's way, way, way overvalued. But the reality is the trend is your friend, and that's the way it's going right now, at least right now. So I'd be careful of those. I'd look for some volatile swings in the metals markets probably come January and February. I think you're going to really start to see some action there.
Great analysis, man. I appreciate it. I know, pretty wild, right? $4,500, platinum to the moon, silver. We just hit $72. And I agree with a lot of what you're saying. The pressure is going to be on rates. Pressure might be on the dollar. And boy, if pressure's on the dollar to go lower, and we already have gold at $4,500, what does that say, right? Well, the market momentum,
Yes.
man. I mean, momentum in metals. It's like every day I wake up, folks, and I see the headline. I joked Teddy yesterday, all-time high. I say, that yesterday's story? No, that's today's story again, man. We're doing it again.
Right.
Well, Teddy,
right.
Thank you so much for the time, man, for all the great work you do on your newsletter here on the program. I really appreciate it, man. You have a great Christmas, a great holiday, and I look forward to talking to you after Christmas, Teddy. Really appreciate it, man.
Sounds good. You guys all take care and have a safe, happy Christmas, too.
You too. Safe holiday, great holiday. Thanks again. Folks, check it out, the Tiger Forex Report. And like I said, you got some time over the holidays, you want to check out some of the great webinars, check out those webinars under the Services tab. All right, folks, markets. S&P's up by 2. NASDAQ slightly in the red. Dow up 112. We're coming back, folks. One more segment. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we got a little bit of selling in the metals. Right now, silver. I mean, we just traded from where we were at 9:30. Let's put it on a 5-minute. And, you know, you're going to get violent swings like this as when we're just back to where we were at the close of yesterday. But silver just traded down $1.25 from where we were at about 9:30. You got a little bit of selling. You jump over to gold right now. Gold under 4,500, trading at 44.92. You jump over to platinum right now. Platinum, a good, $145 off the highs of last night. We almost hit 2,400, and just like that, we're at 22.49. Sell when you can, not when you have to. Our man Dave White. Okay? This has been a heck of a run, folks. Sell when you can, not when you have to. Pick a price that you're going to be comfortable with. If you get a pullback in, lock in those profits like Teddy was talking about. I think we're going to get a lot of volatility, okay, coming down the line. And don't be afraid to lock in some profits, because this has been a heck of a run in metals. Okay, jump around to the XAU. Yeah, XAU is at a low point for the week right now. Okay, just like that. So be careful in that market, folks. You jump over the dollars. We got metals moving, and yeah, dollars got a little strength, but nothing crazy. We're still at a 97 handle. We got selling in metals right now. Jump back to markets. NVIDIA down by about 0.7% right now. You check in on the Warner Brothers Discovery saga with Paramount and Netflix. Warner Brothers is flat this morning. You jump over to Paramount Skydance, down by about 24 pennies at $13.50. You jump over to Netflix. Yeah, continuing to be under pressure. They got a spending problem. You know, in the long run, that company's gonna be printing cash for a long time. But right now, they got a spending problem, man. When they're spending $100+ billion from Warner Brothers, they're gonna take on some debt. All right, folks. S&Ps, why not? Just sailing into all-time highs. We might get 7,000. We might get 7,000 by the time we hit it. All right, folks. Thanks so much for tuning in. Listen, have a great Christmas. Have a safe Christmas. Be safe out there, okay? No drunk driving. Enjoy it with your family, your friends. Get home in one piece. So we'll see you back here on Monday, as we're closed on Friday as well. Thanks for everything you do, folks. Enjoy your Christmas holiday. Have a great one. Have a safe one. And thanks so much, folks. Enjoy.